Good morning, traders. Welcome to today's market review. This is Fred Razak at CMTrading. Today is August 28th, 2014, and today is Thursday. So looking at the markets, things have been very light, like I said this week. If you look at some of the market review time frames that I'm speaking and I'm presenting, I'm only talking about 45 minutes, whereas normally I'm talking about 10 minutes. There's lots going on. This week, as you can really see, besides the USDCAD, things have been in a very, very tight range. So, like I said before, it's time to really take it easy, trade much lighter, be very picky about the spots that you enter, and just wait for that bigger move next week when things will start coming into play and market makers are back and the financial industry is back. Monday is a national holiday in the United States. It's called Labor Day. It's one of the major holidays in the States, and therefore the markets are closed on Monday, and as such, many of the instruments that you have on your trading platform will also be disabled or closed just because the markets are closed. So just bear that in mind. The Forex markets are open, okay, but other than that, you shouldn't see too much going on. So like I said, continue to keep it light. And just wait for next week. Looking at the EURUSD here, we have a little bit of a bounce the past couple of days. If we look at a 2-hour chart, there we go, that's a little bit better. We consolidated down here, and we're bouncing, retracing, bouncing, and retracing. We still haven't filled the gap here, okay, so that's still very negative sentiment. I would like for it to fill this space, okay, right here. In order to show that it's going to do some sort of a reversal. But if it doesn't break higher and it continues going down, needless to say, it's still a very weak currency. So just keep it in mind. It can still bounce, but as you can see, the bounces have been very, very small compared to how many times it's actually retraced and fell apart. So the trend is your friend. Can continue to keep that in mind, and there's no reason for it to continue going down, even though that it's retraced something like 800 pips over the past 4 months. It's irrelevant. Okay, so that's one. Looking at the GBPUSD, again, things have been very light. We're bouncing here about 20 to 30 pips. Again, consolidating at the bottom of the range after being really sold off from 171, which was a big, big move. For what it's worth, if we look at the year on a yearly chart, it's pretty much coming in from 148 in July of last year. We rallied maybe 2200 pips, and now we're tracing about 300 to 400 pips right here. So all in all, it is relatively a healthy retracement. However, that doesn't necessarily mean that it won't go back to 150 or 156. So keep it in your radar. It's definitely something that will be continuously trading, and as things come and resurface next week, I really would keep an eye on it. Looking at the USDCAD, okay, just briefly. We'll see this big sell-off. This is about 80 pip sell-off just in the past couple of hours. Hit somewhat of a resistance on 109 on a 4-hour chart. Let's look at a longer time frame and then just retrace. It's a much harder trade. There's no question. It's hard to anticipate these things. Maybe you could have set a alert at about this point if it broke it, and then chased it down a little bit to make about 40 to 50 pips. But like I said, it's a choppy market, so it's very hard to catch these. Okay, I'm admitting, even for myself, it's very, very difficult to catch these. Looking at a 4-hour chart of the gold, we saw that it did bounce very hard towards the middle of the month, and now it's sold off. Consolidated down here, bounced like we said. As we said, it was going to consolidate around 170, bounced to about 1290. And this thing is just sideways trading, so it's a crapshoot. You have larger or better percentage plays when you're at the top of the range or the bottom of the range to pick your spots, but just realize, gold is not really trending this month. Not to say that it won't trend next month or the month after that, but it might be interesting to keep an eye on gold for the next 3 months just to see how the indices play out and to see if they get sold off. Might be good to jump in the gold if they do get sold off, and hedging yourself short the markets, long the gold, in order to place yourself at a better hedge. So that is something you should look into and maybe anticipate for the next 3 months. Like I said before, fall time, autumn time is a very, very, in the Northeast at least, is a very well-known time for the markets to sell off. So keep that in mind, all right? The markets usually sell off in October, November, maybe rally back from the end of November until December, and then whatever happens after January. Looking at the Dow Jones, like I said, we're at the top. We hit new highs the other day. We're tracing maybe 30, 20 points, nothing big. Markets are still very, very, very low volume. So, like I said, we may come out next week and see a big sell-off right here after not breaking higher, even though that, we're at light volume. We could also, for the same price, be much higher up. So you have to look for some clues in the market to see what's going on. Sometimes it's there. Sometimes you have peripheral clues that can give you a better direction of where the general market's going. But sometimes it's not. So right now, I don't have much to say. Most of the companies are not really. Showing their earnings this week. It's still a very quiet session during the time of the summer. So as a result, I wouldn't take any positions here because there's nothing that is giving me some sort of credence, some sort of confirmation. That's here at Fred Razak at CM Trading. Want to wish you guys a great trading day.